Hey, welcome back to The Dive. In general, supply chain and transportation pressures have weighed on profits across industries recently. And our guest today will share his thoughts on consumer trends with high food prices and fuel prices, interest rate hikes, inflation, sectors he likes in the long run, mortgage rates, cryptocurrencies, and gold. He is the founder of Oxbow Advisors. Ted Oakley is joining us today. But before we bring you Ted's interview, do me one quick favor and just go ahead and smash that subscribe button so we can keep making you these videos. Hey Ted, welcome back to The Dive.
Thank you, Cassandra. Glad to be here.
Okay, so yeah, we're so glad to have you back. Thank you so much for joining us. Okay, so after decades of neutrality, Finland and Sweden formally applied to join the NATO military alliance. What impact do you think Swedish and Finnish NATO membership will have on the global markets?
You know, and I've looked at this just from a personal standpoint. I've got to tell you, Cassandra, I'm not an expert in this area, but I stay up with it. And one of the things I was wondering about is you can't go into NATO if you have a conflict going on. And I was wondering if before they got voted in, if there was any chance that Russia may just sort of sword rattle with them or something so that it would keep them out of NATO. Now, that's just personal opinion. I don't know if something like that would ever happen. But I think what that really does is it probably just presses it further. You know, this is a person in Russia that said, hey, you know, keep those missiles off my border. And so the more you keep pushing that, I guess the more we're going to have trouble. But it's hard to say, hard to determine what he might do because he's been hard to tell, hard to figure.
Definitely. Okay, so this earnings season, both Walmart and Target's shares dropped as they reported their quarterly profits. Both stated that they see a shift in consumer spending. Where do you think consumer trends will move with higher food and fuel prices?
You know, Cassandra, it has to go down. One of the things I find about Wall Street, and particularly in Washington, the Federal Reserve, et cetera, is they really don't know much about the person that what I call lives week to week. Now, I grew up really poor. It's delved in my mind. So I know what that's like. And so I know what's going on with them right now. They don't, you know, when you have a really, really slow and tight margin of money as a person that just lives weeks to week, then you can't go do other things. You have to say, well, I got to buy gasoline, I got to buy food, you know, and it comes down to what are you going to do for your children? And I think that overrides any extras you might buy. And that's where you're seeing it, you know, in Target and all of these other places, including Amazon. So I think that's where we are today. You'll see more of that, I think.
Now, Fed Chair Powell said that they will keep pushing to tighten the U.S. monetary policy until they see inflation coming down in a clear and convincing way. Do you think that they can achieve the so-called neutral rate?
Well, I do think they will achieve it. Unfortunately, I think the way they will achieve it is they'll run it in the ground. They'll have a recession. And that's always what happens, really, when you get right down to it. That's when you have a recession, it slows things down and you quit buying and then inflation comes down. So I think that's the answer to it. I'm not certain that's what they wanted the outcome to be, but right now they're looking backwards. So I'm not thinking they're too worried about it, but they will be. You have a recession, you get the market down a lot more, and you'll see them. They'll change their tune.
Yeah. So how big of a problem do you think inflation is for Joe Biden?
Well, the problem is you're only 6 months away, or actually a little less now, from the election. And so, you know, if you look at just, you know, a lot of voters now have gone into the independent camp. If you look at the latest Pew Research, for example, and some of those, you'll see that now, you know, almost 50% of people feel like they're in the independent camp. And I think they're going to look at the economy, and we'll see. I mean, that's a big driver on voting.
Now, given everything that's happening on the macro front, from 8.3% April CPI, further rate hikes on the table, stagflation, and recessionary talks, what sectors do you like right now on the long side?
Well, I think, Cassandra, you know, for example, on the stock side, we're about more than 50% cash right now. We own a lot of the companies you would know, but most of those are not in a value place where we'd want to buy more of those, or some new companies that we have about 200 companies on that side. On the other portfolio we have, though, there's a number of things we like. We like the real estate investment trust. We like the pipelines, things that have yield to them, preferred, the big preferreds, convertible prefers, convertible bonds, things that we really have a chance to get some upside out of. And really, we like the 1, 2, and really 1 to 4 year bonds. You look at those rates right now are way up. And the municipal bonds, you take a AAA municipal bond, and I've never had this happen, but a few times in my career, but the municipal bonds are yielding the same or more than a U.S. Treasury bond. So people need to be looking at those munis. They won't stay like that forever. There's usually a gap in those two. So those are some of the things we like.
Yeah, the weekly mortgage demand from home buyers tumbled 12% lower compared to the same week a year ago. We've seen 30-year fixed mortgages rise to the highest level since 2011. How big of an impact do you think the move in mortgage rates has had on the U.S. economy?
Well, people forget about how big a number really real estate is in GDP. It's a big number. It's just the whole package, building, buying, everything. It's more than 25% for sure. So what happens is the first-time home buyer, by the way, is out. You got to figure, 560, 575 or 6% go in mortgage right now with home prices where they are will never work. The first time person is out. And that's why you see mortgage apps coming down. There was enough in the queue of people that had locked in rates to keep it okay until about 3 or 4 weeks ago. Now you're starting to see the difference. And then the second thing is you ruin mobility. Like if I have a 2.5% mortgage and I want to go buy a larger home, for example, but all of a sudden I've got to pay more than double the rate on that, plus 25 or 30% higher on the home. Then I'm saying, if I'm a person that have a couple of kids, for example, I'm going to say, you know what, I think I'll wait on that for a while. That's what happens. And that's what we're seeing from the builders. They've held back, and I think they've been unafraid to throw spec homes out there and not have any problem. And if they were smart right now, they'd look around and think, this may slow down a little bit here. And I'm not seeing that, but you'll see it eventually.
Okay. So let's move on to crypto here. With all of our interviews, you've made it clear that you're bearish on Bitcoin as a store of value due to its volatility. After the recent events with certain stablecoins, do you think that there is a path for crypto to work with regulators without destructing the entire sector as a whole?
I don't know about that, Cassandra. My problem with the whole crypto space is there's no economic value in it. Now, I'm not saying that Bitcoin, Ethereum, and probably the top 10 don't really get through the valley here and do okay in the long run. They probably do. But I think they remind me more of a collector's item than an economic value. And so I think where this is all headed, you asked that relative to the governments and the regulation, is I think eventually the decentralized finance goes a different way, and they'll use the blockchain, that sort of thing, in a real positive way. But just those other 10,000 coins out there, I can't see any place for them. I'll be surprised if all of them don't go to zero, but that's personal opinion.
Well, gold has had a rough week. How should investors use gold in their portfolio, Ted?
It's down some, Cassandra, but on a relative basis, it's had a decent week. Even today, it's not down much. I think the miners will do worse than the bullion. That's typically the case when markets are going down. People will, when they're trying to get liquidity, they sell anything. And so they'll sell the miners to try to get liquidity. They usually come back really quickly, but the bullion usually holds, and it's holding fairly well today. It's had a couple of down days, but generally it's had a good few weeks here. So, and it's still up for the year. So I think it's okay. It's not like something, we have a 4% or 5% position total, including the bullion and the miners, but I don't think we'll change that.
Okay, great. Well, that's all we have for you today, Ted. Thank you so much for joining us. It's always nice to hear your insights.
All right, Cassandra, thanks for visiting.
Thank you so much for tuning in today. We'll be back again tomorrow with the latest news and updates, so you're not going to want to miss out. So be sure to hit that notification bell before you leave.